I wonder what your forecast is now for inflation. How do you see it panning out with central banks now starting to act?
Well, thank you very much for having me. There are different dynamics going on right now. Certainly, some of the causes that have generated an increase in inflation are still alive. Part of them, the supply chain bottlenecks, commodity price pressures. To some extent, the policy impulse is still there. And at the same time, expectations have started to be adjusted. Some pressures on the labor market are being more obvious. But the good thing is that monetary policy have started to act in a forceful way. Now we know that there is some lag between the effect of monetary policy on inflation, but we're starting to see some adjustments in expectations. So what is important right now is for the actions that the central bank to persist and enact forcefully in a flexible way. I think that we are at the beginning of the effort of turning inflation around given the efforts of the central banks. So far so good, but we still need some ways to go forward.
In terms of the possibility of central banks raising too much and driving economies into a recession, how much is that a worry for you?
Well, I mean, we believe that they have started the process relatively early. We have a relatively good starting point from the point of view of the resiliency of the economy. Another factor of risk that could make deeper the impact of the monetary policy actions into activity, namely the response of the financial market or the nexus between the financial sector and the real economy hasn't shown signs that are of concern. So there is a possibility that it can be pulled off without a major impact. I mean, yes, with an impact on GDP, but not going all the way into a recession. But it's a narrow path, and certainly we cannot discard the possibility of a hard landing, although from our point of view, is relatively small at this stage.
Okay, so there is still a path to a soft landing, even if it's narrow. How does your view of history inform that? What similarities do you see for this moment in time relative to the 1970s, for example?
Well, in 1970s, the shock to the oil shock was far bigger, and the energy dependency on oil was also much bigger. In this case, the oil shock is smaller, but probably it's broader. We have not only energy, but we also have some commodities, some basic materials or inputs for production that have been affected. So it's a little bit broader. At the end of the day, what can make the difference, and I think it will make the difference, is that the monetary policy frameworks, the credibility on the central banks is much better set up today to fight inflation than before.
Are we underestimating, though, Agustin, the staying power of this energy rally, considering China hasn't even come back on the map? What happens when they do? And is it foolish for the market to start to turn around in their inflation expectations, given that likelihood?
Well, you know, the slowdown in economic activity will also reduce the demand for energy. And there is a very agile process of substitution there from energy sources, and additional sources of supply can come into the market. No, I think that this is not the first oil shock that we have seen. So I think it's very hard to call, based only on oil, the possibility of a recession.
Okay, finally, I want to ask your thoughts on something that may be considered a commodity or a currency or just a correlated asset to equities, but cryptocurrencies. We have seen a dramatic decline and a deleveraging in this space. I'm wondering how you view the collapse in the cryptocurrency space overall and what threat it may pose to broader financial stability.
Well, as we have said all for quite some time here, stable coins, the vast majority of them are all bought stable. They depend on their value on trying to import their valuation on other assets, and the backing is not reliable. And in some cases, it's not even that backing, as was the case with Terra Luna. In addition, many of these currencies are used only for speculative processes, and through DeFi, the possibility of leveraging exponentially is very, very high, and therefore the financial risks that are being taken there are huge, and this was meant to happen. I mean, this was not difficult to anticipate that at some point this type of actions were going to happen, and it's very likely that they will continue to happen because they have these type of currencies have inherent vulnerabilities.